Imagine a world where a small group of individuals can move trillions of dollars with a single decision, where private meetings shape public policy, where fortunes larger than entire countries quietly determine the price of your home, the future of your job, and the direction of technology itself. This is not conspiracy. This is how the modern economy works. Behind stock charts, government announcements, and corporate headlines exists a hidden system powered by extreme wealth. A system where billionaires don't just participate in the economy, they shape it. This is the billionaire game. And this is the story of who really controls the economy. Today, fewer than 3,000 billionaires control more wealth than half of humanity combined. Their collective assets exceed the GDP of most nations. This concentration of capital is not just about luxury lifestyles or personal success. It is about power. Modern billionaires are not passive holders of money. They are strategic operators. They deploy capital across technology, finance, energy, healthcare, media, and real estate. Their decisions determine which companies grow and which industries survive. When a billionaire invests in artificial intelligence, entire job markets begin to shift. When a billionaire buys large volumes of housing, prices rise. When a billionaire withdraws capital from a market, economies tremble. This is influence at scale. Consider technology. Companies like Amazon, Google, Microsoft, Tesla, and Meta are not just corporations. They are infrastructure. They shape communication, transportation, commerce, and information itself. Behind these companies stand billionaire founders and investors whose strategic choices guide innovation worldwide. Venture capital determines which startups receive funding. Private equity decides which businesses expand or disappear. Artificial intelligence, biotechnology, renewable energy, and space exploration are all being molded by billionaire capital. These are not neutral developments. They are directed. Through hedge funds, private equity firms, and investment vehicles, billionaires control trillions of dollars in moving capital. This money flows continuously across markets. Large-scale investments can inflate asset prices. Coordinated selling can trigger market crashes. Strategic acquisitions can consolidate entire industries under a few controlling entities. The 2008 financial crisis revealed how concentrated wealth and risky financial engineering could destabilize the entire world economy. While millions lost homes and jobs, many of the wealthiest emerged even richer. They acquired distressed assets at massive discounts. Crises do not affect everyone equally. For billionaires, instability often creates opportunity. Energy markets provide another example. A small number of powerful investors and corporations influence global oil, gas, and renewable energy production. Their decisions impact fuel prices. National policies, and international relations. When production slows, prices rise. When investment shifts toward renewables, entire economies restructure. Energy is not just a commodity, it is leverage. Real estate represents one of the most visible impacts of billionaire influence. Institutional investors now purchase massive housing portfolios. This reduces supply for ordinary families and pushes prices higher. Entire neighborhoods transform as capital flows reshape cities. For many, home ownership becomes increasingly unattainable. The economy begins to serve capital first. But billionaires do not operate alone. They function through interconnected networks of family offices, investment firms, and political organizations. These networks coordinate strategy and amplify influence across borders. This creates a parallel economic system, global, mobile, and largely insulated from local consequences. Money moves instantly. Regulation struggles to keep up. Political influence plays a central role in maintaining this system. Through lobbying and campaign donations, billionaires shape legislation. This is not always direct corruption. More often, it is access. Wealth buys proximity to power. It opens doors to policymakers. It frames economic debates. It influences which voices are heard. Tax systems become optimized for capital. Regulations soften around major investors. Trade agreements favor multinational interests. The result is a feedback loop. Wealth creates influence. Influence protects wealth. Globalization intensifies this dynamic. Modern billionaires operate across continents. They shift capital between countries, exploit tax structures, and leverage international markets. Governments compete for investment, often offering incentives that benefit the wealthy while reducing public resources. A single individual can influence multiple economies simultaneously. No voter has that power. Media ownership adds another layer. When billionaires control news organizations, digital platforms, or social networks, they influence public perception itself. Editorial priorities shape narratives. Economic policies are framed in specific ways. Certain issues receive attention while others fade into silence. Information becomes another asset. Technology accelerates everything. Algorithmic trading executes millions of financial transactions per second. Artificial intelligence predicts market movements. Speed equals advantage. Those with access to advanced systems gain exponential leverage. Philanthropy often appears as the compassionate side of extreme wealth. Foundations fund schools, hospitals, research, and climate initiatives. These efforts bring genuine benefits, but they also allow billionaires to shape societal priorities privately rather than democratically. Education programs reflect donor values. Medical research follows funding streams. Social initiatives align with private visions of progress. Philanthropy becomes governance without elections. The concentration of wealth reshapes opportunity. Economic mobility declines. Access to quality education, healthcare, and housing becomes increasingly linked to financial privilege. Entrepreneurship favors those with investor connections. Innovation flows toward profitable markets rather than public needs. Inequality is not accidental. It is structural. Supporters of billionaires argue they drive progress. They create jobs, fund innovation, and take risks governments cannot. There is truth in this. Inequality is not accidental. It is structural. Supporters of billionaires argue they drive progress. They create jobs, fund innovation, and take risks governments cannot. There is truth in this. Many technologies exist today because wealthy individuals invested early. Digital finance introduces new methods of influence. Cryptocurrencies and decentralized platforms operate outside traditional regulation. Those who control liquidity gain enormous leverage over emerging economies. The future of money itself is being written by investors, not citizens. Economic crises will continue to amplify inequality. During downturns, average people lose income and security. Billionaires acquire undervalued assets. Recovery disproportionately benefits those with capital. Each cycle strengthens concentration. This is how empires form quietly. Yet the billionaire game is not inevitable. Transparency, regulation, and public awareness can rebalance power. Antitrust laws can restore competition. Fair taxation can fund public goods. Antitrust laws can restore competition. Fair taxation can fund public goods. Democratic oversight can limit private dominance. But these measures require collective will. Understanding the system is the first step. The economy is not a natural force like gravity or weather. It is a human design. Every law, market, and institution reflects choices, often made far from public view. So who really controls the economy? Not markets alone, not governments alone. It is shaped by those who command capital at planetary scale. Billionaires do not rule openly. They operate through investment flows, political access, technological control, and information networks. Their influence is quiet, persistent, and deeply embedded. They do not need thrones. They own the levers. This is the billionaire game, a system where wealth becomes strategy, where influence multiplies itself, where the future is shaped in private rooms before it reaches public debate. Recognizing this reality does not require hostility toward success. It requires clarity. Because until society understands how power truly operates, decisions about work, housing, technology, and opportunity will continue to be made by a very small number of people, on behalf of everyone else. The economy is not just numbers on a screen. It is the structure of modern life. And right now, that structure is being quietly designed by those who already have the most.